Hello and welcome to this Wednesday edition of FreightWaves Now. I'm your host Anthony Smith, and coming up we're going to have Luke Falasca giving us an update for the brokers. But first, we're going to go to Zach Strickland with the carrier update brought to you by PowerFleet. Stay tuned.
Hey everyone, and welcome to your Wednesday carrier update presented by PowerFleet. I'm Zach Strickland, and the market itself is still hovering right around a 5.6% tender rejection rate. Not a big shift. We did see a little bit of increase in tender rejections. Capacity tightened slightly over the month of February, about a quarter of a point, which is relatively good news for the carriers out there in terms of creating some form of upward pressure on prices, or at least it's just holding them stable right now, which is all you really can ask in the month of February. January, February, typically the slowest times of year. Again, we've got a lot of uncertainty coming up with the coronavirus coming around March, April, which is typically one of the big construction pushes. A lot of those ships are sitting in China right now, not moving off that out of the port. So we will have to monitor things closely here over the next month or so regarding the coronavirus and its impact. So the United States, as we are right now in the moment, not looking too far into the future. Weighted rejection index map, still some destabilized markets along the Gulf Coast. We've been monitoring New Orleans, Mobile, Montgomery as being some of the most disrupted markets over the last couple of weeks. Rejection rates have been increased or elevated week over week in those markets. A lot of that is not necessarily on the dry van side, however, and I'm going to dive into that here in a minute. But again, we've got a weather system that is moving across the upper portions of the Midwest, which could disrupt some flow, but a lot of the snow is going to drop into Canada, I should say. Not as much accumulation expected over the upper portions of the Midwest, Detroit into Buffalo, etc. You will see some accumulation, but again, for those areas, not a huge deal, but still be mindful of the traffic up there and be safe out there. So looking at some of these markets, we had Mardi Gras end yesterday with Fat Tuesday, New Orleans being one of those bigger markets that is disrupted. Looking at the tender rejection rate for the New Orleans market, you can see this big Devil's Tower right here at 9.46%. That's up from under 5% a week ago. So a pretty significant increase in tender rejection rates. But you look at right here, this is the van outbound tender rejection index here in the green line here. It's a huge discrepancy between van rejection rates and the overall rejection rate in the market. Now, what does that mean? That means that there are other forms of equipment that are creating a lot of the instability in this market. You're going to look at your flatbeds, your container, your high side containers, a lot of construction equipment, a lot of bulk freight, etc. Things that you can't see, some reefer activity potentially here, things that you can't necessarily see because they don't exactly have that much volume traditionally out of this market. So anybody that's moving flatbed or any kind of construction equipment, specialized containers, equipment like that, really need to pay attention to the New Orleans markets, the Gulf Coast region here over the next little bit. You can see that the New Orleans market is a pretty volatile market in general, so it is important to watch this area because you do have a lot of volatility. Means you should be able to have some sort of leverage in terms of rating moving in and out of that market. So looking at one of the biggest markets in the Southeast, however, I wanted to point this one out because Atlanta, this is the time of year where we really start to see the southern tier start to pick up. The last little bit in February, we did see rejection rates peak up there. If you look at the blue line, rejection rates did jump up a little bit, not significantly, but it is a early warning sign of activity out of this market. Reefer rejection rates still hovering, a little bit more volatile, not as much activity there. But the Atlanta market, we are expecting to pick up here over the next couple of weeks. Looking at the outbound tender volume index, you can see the volumes surged over 400 points here in the last day or so, last couple of days. Looking back to March of last year, or this time last year, I should say, we did have a nice little hump here in terms of a lot of volume coming out into the spring. So we are watching this market for the early warning signs of a lot of increased activity and increasing volume. And that'll do it for today's carrier update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Good morning, everyone. I'm Luke, and I'll be talking about your broker update for today. And we've got some interesting activity happening in the reefer world, but before we get there, let's just go ahead and take a look at the charts. So we're looking at tender rejections today, things that you're very familiar with. In blue here, we've got the dry van tender rejections. Now, this probably looks familiar. In blue is dry van, in green is reefer. So we've seen a lot of downward movement this month in tender rejections, sitting at about 5.25% for dry van tender rejections and about 11.5% for reefer tender rejections. So very, very suppressed and continuing downward, but it looks like there might be an uptick in reefer volume levels, which we can see on this next chart. So the blue line here is dry van volumes also moving up, which is a good sign. So with that increased demand, we might start to see tender rejections move up in time. We'll see. And then also this orange line here is the reefer volume level. Again, pretty sharp increase here over the last couple of days. So something to get excited about. And we want to see those numbers continue to move up. So as those numbers continue to push higher, we might see some greater demand, and potentially they might start to increase rejections. So we're going to take a look at our map today. This here is the reefer outbound tender rejection weekly change. So markets in blue would signify that rejections have been getting higher over the last week, versus markets in red would be tender rejections would be reducing over the last week, and the white markets are just fairly balanced or unchanged. So what this tells me, if you're moving any freight here in the Pacific Northwest area like Portland, Spokane, Washington, there's going to be a decent amount of upward pressure on reefer spot market pricing, as well as in the middle of the country around Sioux Falls, but also Green Bay is seeing some, Memphis, a little bit there in Savannah and South Carolina. There's a decent amount of movement. So if you're moving reefer freight in those areas, pay attention. I would increase your spot market bids. Shippers are having a little more difficult time covering their freight. But also, if you don't have customers, those might be some areas to focus on to land a customer. As tender rejections go up, shippers have a harder time covering their freight. Great opportunity for you to come in, be the hero, give them some capacity, win a new customer. Some of these red markets, though, you're going to have the opposite effect. It's going to be a little easier to cover your freight and a little bit cheaper. So if you are moving any freight there, it looks like we got in Arkansas, some parts of eastern Tennessee, the Dakotas, and a little bit there in North Carolina. If you're moving any reefer freight out of those markets, push your rates down, especially on carriers, to increase margins. It's a little bit softer in those markets, so you should be able to get away with that. Now we're going to be taking a look at the Green Bay, Wisconsin market today. Has a decent amount of reefer volume. This blue line here is the reefer volume in this market. So we see here day over day, there's a massive increase, about a 25% increase in reefer volume day over day. Massive increase. This market has experienced these, big, peaks and valleys pretty regularly, so it's not something that is uncommon. But whenever that happens, this green line here is those reefer tender rejections. They're spiking right along with it. Remember, the national average is sitting at about 11.5%, but tender rejections are sitting at 32% out of Green Bay, excuse me, forgot where we were looking. So you'll see these increases, volumes up about 25%, reefer tender rejections are up by, well over 15%. So there's a lot of extra demand there, and also rates are going up. So use that to your advantage, call shippers, move their freight, increase spot market bids, and you should see a nice payday out of Wisconsin today. I'm Luke, and that'll do it for today's broker update.
And that's going to do for this Wednesday edition of FreightWaves Now. Thank you so much for tuning in. The content doesn't stop here. Our media team is always hard at work, so we're streaming around the clock on all your favorite social media platforms and on all your favorite streaming platforms, including Apple TV. Also, if you're looking for a little bit more insights, check out our Passport program, where you get access to all of our industry events and our industry deep dives on all the latest happenings within the industry. Thank you so much for tuning in, and we'll see you on the next episode.
Is the trade war back on?
Trade war.
Trade war, full-blown trade war.
15% tariffs on $112 billion worth of goods.
Hours earlier, China announced tariffs of 5% and 10% on U.S. products.